How much can I borrow for a mortgage? That is the question first-time buyers ask me regularly, and the rules have been changing a lot. So let's have a look at how much you could borrow for a mortgage based on your income. And as a bonus at the end of the video, I will be letting you know my go-to mortgage lenders for first-time buyers. If you earn between £20,000 to £29,999, then you'll be looking at a maximum borrowing of around 4.5 times your income. So for £20,000 as a salary per year, this will lend you around £90,000 for buying a house, and somewhere between £80,000 to £85,000 if you're buying a flat, because you need to take a little bit off if there's leasehold and service charge costs that will be taken into account by the mortgage lender. You can then add your deposit on top of this, which will give you an approximate budget of the property price you can look at as a maximum. If your salary is £30,000 or above, then you will have access to income boosting products, also known as enhanced income multiples, where you'll be able to borrow up to 5.5 times your income. However, this is usually only available on 5-year fixed rate mortgages. For salaries of £30,000, you'll be looking at around £165,000 borrowing as a maximum. For salaries of around £35,000, you'll be looking at a borrowing of around £192,500. And for salaries of £40,000, you'll be looking at borrowing of around £220,000. For salaries of around £50,000, you'll be looking at borrowing around £275,000. And salaries of £60,000, you'll be looking at borrowing in the region of £330,000. Now, for every £5,000 extra you have on your salary, you can borrow approximately an extra £27,500. So for my last calculation of £60,000 borrowing £330,000, that means a salary of £65,000, another £5,000, will provide you a loan amount of around £357,500, and so on, which is £27,500 increase on the last example. Bear in mind that if you're doing a joint mortgage application, the entry salary is around £50,000 as a minimum, as a joint salary, to obtain these income boosting products. Sometimes it's a little bit more. If you want to borrow more than the standard income multiples, then my go-to mortgage lenders are Accord Mortgages, who are the sister company of the Yorkshire Building Society. Both have very similar products. Nationwide, who have the Helping Hand Mortgage. And most recently, my favourite mortgage lender for enhanced income multiples is Principality Building Society, as they will take 100% of a second job into account, 100% of overtime into account, and will allow you to apply with up to 4 people, considering all 4 incomes. If you don't qualify for the enhanced income multiples if your salary is under £30,000, then my favourite mortgage lenders for first-time buyers include Virgin Money, NatWest and Skipton Building Society, who at the moment are the top 3 mortgage lenders that I've used for some time, and you don't need income multiples being enhanced if you're going to use these lenders, and if you don't need them, they're all focused on first-time buyer products. If you'd like to know more about Principality's new exclusive income boosting product that has been brought out, then you can watch this video here. And if you like to know about the new £5,000 deposit mortgage by Yorkshire Building Society, then you can also watch this video here. Mortgage warning. As a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. Please do keep subscribing to the channel. I'll keep the bonuses coming. Our goal is to make this the best channel for first-time buyers, and we are currently making a huge community in the background for first-time buyers, which will be completely free. So be sure to keep your eyes and ears open for that. Have a beautiful day. I'll see you in the next one.